Hello guys, and welcome to myfinancesteacher.org. Check me out on the website, subscribe on the YouTube channel so that you stay in tune with our investments and analysis. And our interests are mostly in commodities, precious metals, cryptocurrencies, and the general market, as well as crude oil. A quick update on the last quick risky trade in the stock market. I entered triple Qs on the 20th of August at about 188, and I had a stop at about 184. The next day on the 21st, when QQQ was somewhere at around 189, I brought up my stops to the break-even level so that even if the stock market crashes, I wouldn't lose any money on this trade. And what do you know? The very tip, this low for the day, was just a couple of cents below my stop loss. So I'm now currently out of this triple Q trade. I just wanted to let you know about it to show you that I put my money behind my words. And I'm not going to re-enter that trade because I think, as some of the viewers mentioned in the comments, it's just a little too risky. These intermediate cycle declines usually happen in at least 3 steps. We still have to see a third step, which should give us a lower low. So it is pretty risky. Looking at S&P 500 itself. Additionally, this intermediate cycle has only been going on for under 3 months. Usually they last for half a year. So there is still a lot of time left within this normal duration of an intermediate cycle for the cycle to continue into its declining phase for quite a while. Besides that, we see that over the last several trading days, S&P 500 is struggling to close above both the 50-day moving average and even the 20-day moving average yesterday. So I'm out of triple Qs with a break-even, and for a while I'm not going to try my luck on the stock market until we're either convinced that the trend does continue if S&P 500 closes convincingly above, say, 50-day moving average, or until we see a lower low, which is a normal occurrence in an intermediate cycle decline, followed by some sort of a rally so that you don't catch a falling knife. So we are putting away the stock market for a while, and for the same reason, I think it's questionable whether it's time to enter a trade in crude oil. It looks like on the weekly chart, crude oil is forming some sort of a symmetrical triangle. So over the next couple of weeks, it might just inch closer to its 50-week moving average, somewhere in mid to high 50s. And after that, I think we are going to see a violent breakout of this triangle. That's usually what happens with these triangles that reduce volatility, and we see that over the last few weeks 14-week RSI isn't moving far from neutral at all, and these sort of periods are usually followed by high volatility periods. But I'm still not really sure which direction will this break out. It might still break on the downside if the stock market gives us a lower low. But I guess we will have to see. I think either of the scenarios where crude oil breaks up or down from this triangle is quite possible. And lastly, a very quick look at gold, because I think a lot of people might be interested to see that. We are in the second daily cycle in this ongoing intermediate cycle. Intermediate cycle has been going on since the beginning of May. The current daily cycle, second one, looks like it's been going on since the beginning of July. These usually last for a couple of months. Looks like we have already entered the declining phase of this short-term daily cycle. So I still expect several more days of downward movement in the gold market, possibly down to 1450, but of course we'll have to see about that. This previous daily cycle decline took the gold price down to this red line, which is the 20-day moving average. We haven't even reached that yet. And actually, within the decline of the second daily cycle, we might even come much closer to the 50-day moving average. Because after all, the first daily cycle was quite an impulsive move out of the intermediate cycle low. The second one, although it was also quite impulsive, we see a really nice gain from the low of 1380 to the high of 1530 or so, is already coming close to the middle of the intermediate cycle. We might have seen the top for the intermediate cycle. So it is possible that the decline in this second daily cycle might be a little bit more substantial than the previous one. Maybe we will come closer to the 50-day moving average. After that, there will be some bounce into the third daily cycle, but again, as I mentioned before, since the intermediate cycle will be relatively mature by then, it's not certain whether that next bounce is going to give us higher highs. So that is all, just a quick update for you guys. Hope you're having a nice day and good luck in your trades.